members. We are shortly moving into the VCM on audit evidence. Now on screen you have our Vice Chairman Aryan Keki and the very dynamic Chairman of Trichure Branch, C. Anoopji, and the speaker of the session, the very learned CA BALAJI RS from Chennai. So over to the Chairman for the opening remarks and welcoming the attendees. Please, sir.
Thank you, C. Ajit. Good afternoon, all. Respected faculty, CA RS BALAJI, members, and my dear friends. Welcome to the second session on the series of VCF that we are having on essays. As you all know, yesterday we had a wonderful seminar conducted by CA Chinnasamy Ganeshan on the topics essay 700, 701, 705, and 706. So the reporting part has been dealt with in detail yesterday. And as all of you know, in a major audit, if we can divide the process of audit to three parts, planning, execution, and reporting. People say 40% of your time is to be spent on planning, another 40% on execution, and then 20% on reporting part. So that third part we covered yesterday. And it was very useful, especially when he reiterated that SA 700 is not applicable also to non-corporate entities. We were all on the apprehension that we were all thinking that it is applicable only for corporates. No, it is not like that. SA 700 is also applicable for non-corporate entities. So yesterday also he gave a format of audit reports of non-corporate entities, LLPs, private limited companies, as well as public limited companies, formats only, draft formats. And they were all made available in Word format. So that has been circulated among members. So it was really a useful seminar yesterday. And today, we are moving to the second part of it, that is execution of audit, covering SA 500 and 501 with audit evidence, 505 on external confirmation, and also, of course, 570 going concern concept, which is very relevant nowadays. Members, generally speaking, we are all a little bit apprehensive this year, especially considering the COVID-19 situation, how to conduct the audit. This is very important, especially the remote audit is a new concept in a Mefusil area like Trichure. But we were forced to do that, and we are doing that. So this is one thing. Second thing, that going concern concept also is very important. So we have to analyze the situation. We have to see whether the going of the business will be affected in the future. So that is very important. And how to conduct the audit. What are the specialities? In addition to the usual points, I would suggest, I would request the learned faculty to cover the aspects of remote audit also, if time permits. So today we have a very learned, very experienced faculty, a senior fellow from Chennai, CA RS BALAJI, and he would be covering the topic today on behalf of management committee and on behalf of all the members of Trichure branch. Let me welcome CA RS BALAJI to this webinar. Let me also welcome all the members to this webinar. And now over to CA Aryan, my vice chairman, for formal introduction of the faculty. Please.
Thanks,
CA.
Chairman Anuji. Good afternoon, all. Respected Chairman, other management committee members, speaker of the day, members attending the virtual seminar. It is my great privilege to introduce today's speaker, CA RS BALAJI. He is from Chennai. He is speaking on audit evidence, SA 500, 501, 505, and 570. CA RS BALAJI is a fellow member of the Institute of Chartered Accountants of India. He took his bachelor's degree of commerce from University of Madras. He is a practicing chartered accountant specializing in audit and indirect taxation. He acting as member of Auditing Assurance Standards Board of ICI, Academic Council of Sri Shankara Arts and Science College, Kanchipuram, Editorial Board of Padukas Publications. He is a regular faculty for CA students on Auditing and Assurance for CA Intermediate, Advanced Auditing and Professional Ethics for CA Final, Indirect Tax Law and Information Systems and Control Audit for CA Final. He has been awarded the Best Outgoing Student and secured college first in BCom. He handled international taxation and corporate taxation in a NASDAQ-listed Indian company. He worked as AGM accounts in an NBFC company. See, R.S. Balaji has complete certification course on international taxation. With this view, let me introduce our speaker for the day, C.R.S. Balaji. Thanks. Balaji sir, requesting you to start the session, sir.
Good afternoon, Trishur. It's indeed a pleasure for me to meet you all through this wonderful webinar mode. Thanks to the chairman as well as the managing committee members of the Trishur branch of ICA of SIRC for wonderfully utilizing this opportunity in spite of the difficult timing and in spite of everyone is having certain problem, but still to go in for converting the threats or converting the barriers into opportunities, and this is a very good way wherein we can enrich our knowledge. We can also technically get ourselves qualified. Basically, for a chartered accountant, nobody needs to come and teach how basically he needs to go for an audit. However, there are various requirements, various regulatory requirements, and also the expectation from the world at large that is causing the auditor to go in for carrying out the audit, not only in the way in which he has to, but also it demands a certain technical performance from the auditor's end. So in order to go for that, in order to comply the requirements, in order to go in for a regulatory perspective, we will be analyzing this particular topic today, the standards on auditing. I will be in the position to handle these 4 important essays, that is on 500, 501, 505, and as the chairman pointed out, 570, which is another important standards on auditing. All these are all under the audit evidence series of the standards on auditing. Let me go in for the technical presentation, and I hope this will be a eye opener for us to go in the concentrate or focus on the expectation from the regulatory perspective and also the compliance of the technical professional standards from the auditor's perspective here. Let us proceed further for this. The first base question, I usually start with this particular question in any of the standards on auditing seminar, that is it complying an auditing standard is mandatory while doing an audit, while especially say for example a company audit, whatever may be the case, as the chairman has rightly pointed out in the introductory speech, whether it is a trust, whether it is a society or a partnership firm or an individual entity where there is an audit that is required and an auditor is performing, should he need to comply with standards on auditing? And specifically in a formalized sector like a company audit, whether I need to comply with auditing standards. Sir, I know how to do an audit. 30 years, 40 years, we are doing audits. Right from our articleship, we are doing articles. We are doing audits. Wonderful verification perspective we might have performed. We know our responsibility, and then we might have taken all care and caution while performing an audit, and we might have done with all professional care. What is this particular auditing standard talk about? Why I need to comply this today? Suddenly you are talking about something theoretical about auditing standards. I need to comply this. What is this? Is it not that you want to go in for a theoretical compliance, or practically we need to perform? What is expected? Is it not practical performance is important rather than theoretical compliance or something? You mean to say that only to document aspects and then not to do the activity? Why this particular auditing standards are galloping that much of importance? All these questions will have answer in this particular session. If I put this question, whether compliance of accounting standards is mandatory for a company audit, obviously you will be laughing at me that mandated, because Companies Act also says that. The problem with regard to auditing standard was up to Companies Act 1956, it was very silent on the way in which auditor has to carry out the audit. It doesn't talk about, Companies Act 1956 doesn't talk about how the auditor has to perform the work. It only talked about how the financial statement has to be prepared by the entity and how the auditor has to go and report what are all the duties of the auditor, rights of the auditor are stipulated in that particular Companies Act. But however, it was very silent on the way in which auditor has to do the work. So it is only our institute through the auditing standards or the S2LAS or SA where we need to go in for complying. It is only from the institute perspective in order to ensure the quality, and not from the statutory regulatory perspective. The Companies Act was very silent. There is no other overseeing mechanism for us to go and verify a compliance of auditing standard in this regard. But that is no longer the case. It was a history. Now at present, we have Companies Act 2013, which makes every auditor to go and comply mandatorily auditing standards. So now there is an emphasis from the regulatory perspective and also from the institute perspective here, where Companies Act also wants the auditor to go and perform the audit only based on standards on auditing. So without compliance of standards on auditing, I may not say, yesterday you might have gone for SA 700 reporting perspective. Under the auditor's responsibility paragraph, the first line of auditing responsibility by itself will start like this. We have conducted our audit and we have to express an opinion on the financial statements, and then we have conducted our audit as per standards on auditing. It is basically a declaration that I am providing to the users that I have conducted my audit as per standards on auditing only, which is nothing but the compliance of Companies Act and also my various professional requirement here. So when I am committing that I have conducted my audit as per standards on auditing, I need to necessarily prove that I have conducted my audit as per standards on auditing. Say, for example, I'm saying I'm wearing a white shirt. I need to wear white shirt, then only I can say that I'm wearing a white shirt. If I cannot have a blue shirt and then say I am wearing a white shirt. Similarly, this is the point exactly where when I am committing that in my auditor's report itself, where I need to necessarily commit, sir, can I omit that particular line? No, not possible, because SA 700 compliance is mandatory. So I need to mandatorily go in for compliance of standards on auditing. I need to also reflect the same in my auditor's report, in not only in the words but also in the quality. Why standards on auditing are giving this much of importance? Because 143(2) of the Companies Act makes it mandatory. As I told you, Companies Act 1956 was very silent. However, Companies Act 2013 insists on the duties of the auditor. 143 is the section that talks about the duties of the auditor, including 143(1) exceptional reporting, 143(3) basic reporting, 143(11) CARO reporting, 143(12) fraud reporting. All are 143 related aspects. So in 143, they say, from the Companies Act perspective, the basic requirement as to the financial statements are the auditor shall make the report after taking into account the provisions of the Companies Act, the accounting and auditing standards. Previously, it was only accounting standards. That's why we always give importance for the accounting standards. Yes, we need to give, but not only that, we need to equally give the importance for this particular auditing standards also, because it finds place in the Companies Act as well. Matters which are required to be included in the auditor's report, that is nothing but CARO. For CARO, let me start here. 143(11) talks about CARO reporting. CARO, so long we have reported up to CARO 2016 is what the order through which we will be reporting. In the month of February, Government of India MCA has notified CARO 2020, which was applicable for the financial year ending, financial statements year ending 31st March 2020 onwards. It was originally applicable. However, as a COVID relief measure, CARO 2020 applicability got postponed for another 1 year. So those financial statements ending 31st March 2021, the auditor has to report on CARO 2020. So for the current year, that is for those financial statements that is ending on 31st March 2020, we will be reporting only on the old CARO. CARO 2016 will be applicable in this particular regard. That's just a piece of information that I want to have a clarity in the minds of our learned members. And it should be to the best of the information and the knowledge that the auditor has acquired during the course of audit. The auditor has to report on the truth and fair statements. This is one place where they have insisted on accounting and auditing standards. Not only this, not a passing reference that they go for. There is a specific section that mandatorily imposes the responsibility to the auditor to go in for compliance of auditing standards. Section 143(9), very important. It talks about every auditor shall comply with auditing standards. As we all know, at the interpretation of a statute, the term shall will always mean should. So every auditor should comply with auditing standards. Sir, I am a private limited company. Should I need to comply with auditing standards? Answer is yes. I am a public limited company, listed company, unlisted company, whomsoever it may be, the size of the company, the moment it is a body corporate, it is a mandatory requirement from the regulatory perspective by itself that an auditor should comply with auditing standards. How these auditing standards will be issued? It is again 143(10) talks about it. The central government prescribed the standards of accounting as recommended by ICAI in consultation and after examination of the recommendations made by NAFRA, National Financial Reporting Authority, another new overseeing authority which got constituted and not notified last year. Even Companies Act 2013, at the time of introduction itself, they have placed this particular NAFRA. However, the notification was not yet affected because of various legal issues. From last year onwards, NAFRA got constituted, and there is a separate office that is functioning, and they have also started reviewing the activities in this regard. Huge powers have been vested to NAFRA. Section 132 of the Companies Act talks about this. So NAFRA is now the overseeing mechanism with regard to the audit quality. It is not only with the institute. The NAFRA will be going for audit quality, and also they will take up the investigation mechanism with regard to the work done by an auditor. They may even go and take up a disciplinary matter with regard to an auditor. There is a huge power that is vested with this particular NAFRA. So considering the developments that we have, and considering the responsibilities that are day in day out casted on the auditors, where unless we safeguard ourselves, it will be a great question mark for the auditor's work, that I may not be in a position to prove that I have complied with. The problem with Indian chartered accountants, always what I across India that we discuss with the people, the main problem is we know 100% about the entity. We might have taken very good efforts while doing an audit. We might have guided them properly. We might have identified what are all the errors and what are all the frauds. We might have taken utmost care and caution while doing an audit. No auditor is doing the work at gross negligence. None of the auditor. Everybody takes all the responsibility because they know their responsibility. Nobody needs to come and teach the responsibility to an auditor, because it is there in the bloods of the profession by itself. We know how to uphold our independence. We know how to maintain our quality. We do all this activity with all reasonable care and caution, and then do the activity. At a later point of time, when it comes for reviewing that particular work, either by peer review board or by a quality review board or by this overseeing mechanism like NAFRA, now even after Companies Act, even MCA can question you. When it comes for proving that I have taken all this, I may not be in a position to prove. When I am not in a position to prove that I have complied with standards on auditing, nobody will be coming for our rescue. It is only the standards on auditing compliance will come for our rescue. Otherwise, nobody is there to come for our rescue. There are professional ethics possibility. There are even membership removal is also possible when I am not in a position to prove that I have taken reasonable care and caution. Just to say, to quote it, recently, some December month, NAFRA has issued a quality review report on a particular company audit on a very big auditing firm. And they have entirely tarnished the image of that particular firm, that they stated nothing was there. It was just a shame. It was a sham audit that they have done like that. They have given a very worse impact with regard to that particular quality review. So when big entities, or even they are not in a position to satisfy, when it comes for a small and medium practitioner, he might have taken all reasonable care and caution while performing the audit. When it is not in a position to prove, either by the documentation and also by the other workings and the way in which audit has been concluded, automatically his quality is under question. His entire profession is also under question. It will have an impact on not only that particular person, but on the entire chartered accountants community here. It's similar to a quality with regard to a product. Assuming that I'm Nokia or a Samsung, I'm issuing a mobile phone, coming out with a new product, I need to verify for its quality. Without testing that quality, if I issue and it got failure in my market, it is only that Nokia's market will get affected and not the entire mobile market. That is not the case of an auditor. When an auditor gives a report without the quality, without verifying, and without even complying, it will not only affect that particular auditor, it will affect the entire fellow community, where the entire fraternity is getting affected. Like they will be immediately branding that all the auditors are like this, like that. There is a possibility of a risk with regard to the reputation that the auditors have gained all along this particular period. So let us not give hope for all this. Let us go and comply with standards on auditing. Sir, how to comply with standards on auditing? How many standards that we need to go in for? Is it that I need to comply with all the standards and then I need to go in for taking up the audit? Let us go in for understanding this particular point. There is always a risk in an audit. There is always a risk. Nobody can avoid or nobody can deny there is no risk in an audit. There is always a risk in an audit. That is something called as audit risk, which is basically nothing but providing an inappropriate opinion when the financial statement contains material misstatements. When the financial statement contains material misstatements, it's not mere misstatements that I'm talking about, material misstatements, and the auditor has provided an inappropriate opinion. I think in the yesterday's class, you might have seminar, you might have taken something on modified opinion, saying SA 705 exclusively talks about qualified opinion, adverse opinion, or even a disclaimer of opinion in that particular regard. In all the cases, the underlying provision is material misstatements and sufficiency and appropriateness in audit evidence. So it is all a combined effect that we need to have. So when there is an audit risk, the possibility of auditor providing an inappropriate opinion, I need to identify and I need to reduce that particular risk to an acceptable low level. How it will be possible? I need to go and bifurcate this particular audit risk into three, something called as inherent risk, control risk, and deduction risk. Inherent risk and control risk are inbuilt in the entity, or it is pre-audit risk, where auditor cannot do anything in this particular regard, where inherent risk is inbuilt in the way in which accounting is happening, or estimations are happening, or the way in which judgments are being made by the management. There are possibilities of material misstatement inherent to the operations. Control risk is the failure of the internal controls of the entity, which doesn't detect or prevent an error or a fraud from happening, so that errors or frauds are happening. These two are considered to be the gateways through which a material misstatement is possibly to enter into the financial statement. That's why it is called as risk of material misstatement, also called as RMM. Risk of material misstatement is nothing but your inherent risk and control risk associated with that entity. And the possibility of auditor not being detecting that particular risk of material misstatement is something called as detection risk. My inability to identify while doing my audit, maybe my audit assistants may not be capable, or I might have not trained them properly, or I might have gone for a wrong judgment in this particular regard, or I might have gone for a minimum sample where the adequate verification may not have been performed. All this will lead to detection risk. As the chairman has rightly pointed out, today we are in an environment that there is always uncertainties associated, especially with regard to the way in which business are functioning, and the auditor's position is still precarious, where I need to go and do an audit in a remote basis. There may be lockdown restrictions, there may be restrictions with regard to go and meet a particular person or go and do physically that particular audit in the client's location. There may be disturbances with regard to the articles coming or the engagement team coming and moving on. So I am forced to convert into a different, I need to go and adopt in a different mode of functioning, where that particular different mode of functioning, I may not have the right information, where I might have not identified a particular material. To avoid all this, in order to rightly go and identify the inherent risk and control risk, and also to minimize the detection risk, the auditor has to mandatorily comply with standards on auditing. No other option available. The moment we think of standards on auditing while doing an audit of financial statement, don't think that standards on auditing are an imposition to the auditor. It always contains items that are designed to support the auditor in obtaining that reasonable assurance. In a simple way, in order to comply with standards on auditing, I usually have a formula called 2+3 formula. In every meeting that I use to deliver this particular point, the moment we are aware, we are cautiously understanding this particular 2+3 formula, automatically I'm complying with standards on auditing. What is this 2+3 formula? Just a minute. Sorry. A simple 2+3 formula will always help myself to go and perform the audit properly, and also to report properly, and also to prove that I have done my audit properly. So that is what something very important. It is not only for the auditor that we are talking about. We always need to go and direct and supervise or train our engagement team. That is very, very important. You may be aware about all these aspects. It is not that new that I am going to come and say something on an audit. Your experience may by itself will be may have a beautiful account of verification. But however, not only that, my engagement team should also be trained. So I need to go in for this particular 2+3 formula. 2 in the mind, 3 in the finger. What is this 2 in the mind and 3 in the finger? 2 points that is always constant in any audit. It is not replaceable. It is a dollar symbol that it is always constant. 2 in the mind and 3 in the finger, which will be changing from entity to entity. What is this 2 in the mind? The 2 in the mind are the essays require that the auditor exercise professional judgment and maintain professional skepticism. 2 in the mind, which is always constant in any audit, whether it is a company audit, trust audit, firm audit, listed company, unlisted company, whatsoever may be, it is 2 in the mind that is constant. Professional judgment, that is nothing but making informed decisions that is appropriate in the circumstances that can be made, that can be taken up by the experience, the auditor based on his experience and the knowledge that is acquired through the technical literatures like accounting standards and standards on auditing. On the other hand, the second one is something called as professional skepticism, which is entire world wants from the auditor is this particular one, something called as professional skepticism. Even our international standards on auditing emphasize this particular character of the auditor, professional skepticism. What is this? It contains of 3 important parameters from the auditor's quality. First one being having a questioning mind. It is not something suspicious always. I'm not being a suspicious fellow, but I need to have a questionable mind. I need to always question a particular one and then analyze it and then to accept it, having a questioning mind. The second one is being alert to conditions that could indicate possibilities of errors and frauds. The moment there is a possibilities of errors and frauds, I need to go for attentive and then I need to go and extend my audit procedures in that particular regard. And the third one is critical assessment of my audit evidences, whether those audit evidences are sufficient and appropriate. Because only based on sufficiency and appropriateness in audit evidence, I may be in a position to reduce my audit risk to one acceptable low level. So in this given case, the 2 constant factors to be always formulated by the auditor will be professional judgment and professional skepticism, that is being taking care and caution. I need to document what are all the judgments that I have made, when it has been made, and what context that I have made. And professional skepticism, how I have been in a questioning mind, what are all the questions that we have raised. There may be something, an observation that could have been raised by the auditor. I might have communicated to the management. All this has to be documented in this particular regard. Compliance of SA 230, that is audit documentation, is a very important perspective from the auditor that he needs to go for complying with the standards here. The 3 in the finger that is always constant, that is always changing will be, the first one is identification and assessment of risk of material misstatement, whether due to fraud or error, based on an understanding of the entity and its environment, including its internal control. What I am doing is nothing but identifying and assessing the risk of material misstatement, the possibility of material misstatement entering into the financial statement, either through inherent risk or through control risk. Inherently, there are problems with regard to your valuation, with regard to your accounting model, with regard to the business in which you are into, or with regard to the geographical location that you are into. Like that, there may be inherent problem or there may be internal control problem. I need to go and evaluate so that I am understanding the entity and its environment, including its internal control. As long as I was the auditor or I am the auditor of this company for the past 3 years, 4 years, 5 years, I may be very much be able to have a wonderful grip over the company's operation, its usual place where they commit mistake, where there may be an accounting entry problem. Like that, I may be in a position to going for, especially in an initial audit engagement. First time I'm taking up, there is always a possibility of doing this particular activity very properly so that I identify and assess the risk of material misstatement. The moment I have identified this particular risk of material misstatement, the second activity is my action towards that, my response to the assessed risk. That is nothing but the second point. Obtain sufficient appropriate audit evidence about whether material misstatement exists through designing and implementing appropriate responses to the assessed risk. It is like first one is diagnosis. The second one is based on the diagnosis, I give the medical prescription. Similarly, the first one is assessment of risk of material misstatement. And based on that, I need to make my appropriate audit evidences so that I need to perform my audit procedures, and accordingly, I will be obtaining sufficient and appropriate audit evidence. How to go and get a sufficient appropriate audit evidence? What will be the factors to be considered? We are going to take up SA 500. We will be going and analyzing the same. And the last one is, after me obtaining sufficient appropriate audit evidence, based on that particular appropriate audit evidence, I need to form an opinion and then I need to conclude my opinion. So formation of my audit opinion is something very, very crucial and very important in the entire audit period. And then I need to express that opinion by way of my standards on auditing. Form an opinion on the finance statements based on the conclusions drawn and the audit evidence obtained, and express that opinion by way of my audit report, where my SA 700 gives the form and content of my audit report. SA 701 talks about key audit matters, how it is to be included. SA 705 talks about in case of modification in my audit report, how I need to go in for. SA 706 talks about how to go in for an emphasis of a matter paragraph, or to include another matter paragraph, when to go in for it. All are discussed in the reporting perspective here. Now, the second part will be a crucial part here to obtain a sufficient appropriate audit evidence here. As I say, the moment I document all these 5 points, 2 in the mind and 3 in the finger, all these items to be performed and also to document, automatically it will result in compliance of standards on auditing. Let us go and understand the first standards on auditing on today's discussion here. This is how the reporting flow that goes for: preparation of finance statements by the management, independent examination by the auditor and assessment of the auditor, and then collection of audit evidence and sufficient and appropriate audit evidence. And then I need to form an opinion and then report that opinion by way of an auditor's report. So here, now we are into the third point. That is nothing but the collection of audit evidence that should be sufficient and appropriate enough. What do you mean by sufficiency? What do you mean by appropriateness? How to evaluate that? And then what is there if I don't obtain sufficient appropriate audit evidence? The moment when you don't have sufficient appropriate audit evidence, you cannot give a clean opinion. When there is a material misstatement, you may be in a position to go in for provision of a qualified opinion or an adverse opinion or a disclaimer of opinion accordingly. Or even adverse of opinion may also not be possible, because adverse opinion shall be possible only when I have sufficient appropriate audit evidence. When I don't have it, either I can go for a qualified opinion or even go for a disclaimer of opinion in the given case based on the materiality evaluation. So let us go in for that particular standard that talks about audit evidence, which is considered to be very crucial. At any point of time, the question is, auditor is, what is the evidence on which you have concluded? On what basis you have concluded? Sir, I have concluded like this. Why you have, what made you to conclude like this? I need to have my audit evidence. I need to have my documentation on that. Where SA 500 is the base standard that talks about all the aspects relating to audit evidence. Essays are beautifully drafted in such a way that all related essays will be into one series. 500 series is of that particular nature. All the 500 aspect of essays will be talking only about audit evidence only. 500 on base audit evidence, 501 on specific matters, 505 on external confirmation, and then 510 on opening balances, initial audit engagement, 520 on obtaining audit evidence through an analytical procedure, 530 obtaining audit evidence through sampling, 540 with regard to measurements made by the entity, accounting measurements including the fair valuation measurement, 550 with regard to related party transactions, how to go in for, 560 with regard to subsequent events, how I need to go and obtain audit evidence, 570 that talks about going concern issue, how to go in for an audit evidence. Beautifully they have drafted all these essays. Essay by itself is an ocean, literally speaking. Previously, when I was from the practice perspective, I have not given that much of importance, but always I know that there is an essays evidence. I focus more on this particular standards on auditing and started doing research. Once now into the AASB Auditing Assurance Standards Board, where it gives me a lot of knowledge enrichment and also the practical application in this particular regard that is envisaged under these essays, which is at par with international levels. Sorry, internationally this may be applicable, whether locally, whether in Indian scenario it is possible or not, 100% it is possible, absolutely, that we are following in the regular day-to-day affair. We may know that we are doing the right activity, but we need to do and the proper manner so that we may be in a position to prove the compliance of the same. Let us proceed for this core essay. I always feel this is a backbone of the entire 500 series, essay 500. Let us go and understand what do you mean by that. What do you mean by audit evidence? First of all, there are two important definitions that we can have it in this particular essay. One is audit evidence. What can be treated as an audit evidence? Is it only that I have taken from the financial statements and accounting records can be treated as audit evidence, or anything other than that we can also be treated as an audit evidence? The definition says every audit evidence is information used by the auditor by the auditor in arriving the conclusions on which the auditor's opinion is based shall be treated as an audit evidence. It not only talks about financial information, but also it includes other information. Audit evidence includes both information contained in the accounting records underlying the financial statements and other information. So it gives the wide character. It not only confines only to those information in the accounting records, but also the other information. Say, for example, there is managing director, Mr. A is managing director of A Limited, and then his son is B. There is a transaction between Mr. A and B. The relationship between A and B is an information that is brought into the auditor. It is not an accounting information. It is something other information. It is not recorded anywhere. The father-son relationship, which is a related party transaction, where it is another information that can also act as an audit evidence for the auditor to go for verification of related party transaction, to go and verify the disclosure accounting of that particular related party transactions here. Audit evidence not only confines to accounting records, but also all other information shall also be treated as an audit evidence only. The second important definition that we need to have a specific caution here is management's expert. When management uses and management's expert in preparing the financial statements in any of the component preparation, the auditor has to be careful, and then he needs to do an extra activity in this particular regard. First of all, let us understand whom we are referring as a management's expert. Management's expert is a person who is having technical knowledge in areas other than accounting or auditing. It may be an individual or an organization possessing experience in a field other than accounting or auditing, whose work in that field is used by the entity to assist the entity in preparing the financial statements. In preparing the financial statement does not mean an entire financial statement preparation. Any one of the component, even the numbers are arrived based on the management's expert's work, it is having an impact on the auditor's work. We usually take this as an example. Say, for example, a gratuity provision has to be made in the company's books of accounts for the employee liability. As per AS 15, I need to go in for an actuarial valuation, wherein the company goes and appoints an independent actuary, and then he comes over and then does the evaluation, provides the actuary report. That particular activity will be treated as a work of a management's expert. That number has been accounted in the entity as the financial statements provision. That is nothing but the management's expert work is used by the entity in preparation of the financial statements. Or there may be other case, like an example of a lawyer providing an opinion that we are going to win this case. No provision is required. Your AS 29, you need not go in for making a provision. We are going to make a clear-cut victory in this particular case. You need not make any accounting provision. Like that, when the opinion of the lawyer has been provided, it is adopted by the entity, and then accordingly no provision is made. When auditor is also accepting that particular fact, then it will be treated as the management's expert work. In that particular case, when I am relying on the work done by a management's expert, what extra caution or care to be taken up by the auditor? Should I need to also engage auditor's expert, or can I rely on the work done by management's expert? Say, for example, there may be a real estate company where they are into construction. As per construction contract, where your revenue can be recognized based on percentage of completion method. What is the percentage that got completed? There may be an expert who may be coming and evaluating the percentage of completion and providing me the record. Accordingly, management may be accounted here. Or in Ind AS applicable situation, there are fair valuation measurement, the registered valuers, or a revaluation measurement and all, where there may be external experts who may be helping the entity in preparing the financial statements. All care and caution to be taken up while we adopt the management's expert work in this particular regard. From the SA's perspective, SA 500's perspective, it warrants the auditor to go in for 4 specific aspects with regard to the duty. I need to comply with each one of the duty. The moment I comply with standards on auditing, automatically my opinion will be an appropriate audit opinion. I may not go wrong at any point of time. The auditor has to obtain sufficient and appropriate audit evidence. First requirement, information to be used as an audit evidence. What information to be used as an audit evidence? Selecting items for testing and obtain audit evidence. How to select items for testing? And in case of inconsistencies or doubts over reliability of an audit evidence with another audit evidence, how to go and proceed, how to resolve this conflict is all discussed in this particular essay. Let us go one by one, and then we will understand with regard to sufficient appropriate audit evidence being the first one. As we all know, sufficiency talks about the quantity of the audit evidence, and appropriateness talks about the quality of the audit evidence. How to go and get it? It is absolutely based on judgment of the auditor. Once again, what is sufficient and appropriate is not defined through a formula. It will be applicable from case to case basis. The auditor has to go and obtain it. But the way in which he can obtain will be of these particular methods. It can be through the inspection, or it can be through the inquiries, or through observations by the auditor, recalculation of whatever the working done by the management. I may be doing a recalculation, say for example, depreciation provision or interest provision or income recognition, whatever maybe I may be in a position to recalculate, or a re-performance of an activity that has been already performed by the entity, especially in an automated environment, the auditor will be performing. External confirmation to obtain audit evidence through an external confirmation, either through a bank or from the debtor, creditors and all, will be an audit evidence. And last but not least, you can also obtain the written representation from the management as an audit evidence. These are all discussed in different essays. 580 talks about written representation, 505 talks about external confirmation, and inquiry and inspection is discussed in essay 501. Observation, recalculation, re-performance are discussed in essay 520 with regard to analytical procedures. There are a lot of applicability in this particular regard, where the auditor has to go and perform these activities, methods, so that he collects sufficient and appropriate audit evidence. The sufficiency and appropriate audit evidence, even though I told it is based on the judgment of the auditor, the two factors and two parameters to be considered by the auditor with regard to sufficiency and appropriateness in audit evidence shall be the relevance of that particular information and the reliability of that particular information. How far it is relevant? If it is not relevant, I need not consider. And even though it is relevant, how far it is reliable? So only when the relevance and reliability test is getting passed, I need to go and use that particular item as an audit evidence. Wherein SA 500 gives guidance for rules of reliability, which one can be relied as an audit evidence. Whether external one only to be understood as an audit evidence or internally generated audit evidence can be relied. Where the reliability talks about like this, the external evidences are more reliable than internal evidences. First point. When you compare this and this, external are more reliable because it is independent source. The second one is internal evidences are also reliable if internal controls are effective. When internal control for an organization is effective, then the auditor may also rely because the extent of errors and frauds are automatically minimized. So always as a part of an audit procedure, the auditor will evaluate the internal controls, not for the purpose of expressing an opinion, but for the purpose of considering that as an audit evidence. The third one, audit evidence is more reliable when it exists in a documentary form, whether paper, electronic or other medium. This is very relevant, especially in a COVID-19 situation. Now, predominantly in bank audits, even we might have done the bank audits on remote basis, or for we are going to do certain audits only on a remote basis. In that particular regard, sir, only scanned copies are provided to me, or only electronically the documents have been provided to me. Can I accept that as an audit evidence? There is no physical document that has been provided. Shall I use it as an audit evidence or not? Answer is very much yes. Why? Because SA 500 considers that particular electronic document as a documentary audit evidence. SA 230 permits my working papers can also be in an electronic form. No problem. My SQC1 standards on quality control also suggests that in an automated environment, your audit evidences can only be in electronic form. No problem, it can be accepted. My Information Technology Act, which also recognizes the fact that notwithstanding anything contained in any other law, whatever the document that is required to be in a physical form or a typewritten or in a printed form, it will be deemed to be compliant if it is compliance with electronic form as per Information Technology Act. Not only that, my Companies Act also recognizes this particular fact. Section 128 of the Companies Act suggests that the company's books of accounts can even be in an electronic form. So now the entire world is going towards the paperless activity. The cloud computing is happening, the cloud-based accounting are happening, and all the database and server are being stored, and then we do electronically. So whether an auditor has to embrace that particular change or not, very much yes, because auditors are always very quick in adoption. They understand very quickly than any other community they immediately understand, they know their responsibility and then go for procedures. When GST was brought in, well, all other people were finding it very difficult for their adoption. Chartered accountant community, just like that, they have jumped into. Still, there may be certain issues, but still the understanding and adoption part, we are very quick. So now it is time for us to go and promote ourselves and upgrade ourselves into electronic mode. Even an electronic based auditing shall be possible. There are a lot of audit softwares are also available to go in an electronic way and then to do the audits in an automated environment. SA 315 specifically suggests that in an automated environment, how an auditor may be in a position to evaluate, how to go for verification of internal controls of the entity, all are permitted in this regard, especially because of COVID also. The fourth requirement of the rules of reliability will be original documents will be more reliable than photocopies. And the last one is evidences available or obtained directly by the auditor shall be more reliable than obtained through any other source. That's why after Satyam case, where the bank balances, certifications and all, the auditor by itself will be directly going and obtaining from the bank by getting an authorization letter from the client instead of getting the routing through the client and then obtaining it. Even your confirmation balance, SA 505, you are directly receiving the confirmation letters from the other party instead of routing through the entity here. All these are all rules of reliability to be considered. Not only that, when a management expert is also involved in preparation of financial statements or his work is being used by the entity in any of the component in the financial statement, how or what extra care and caution to be taken up by the auditor. While performing the audit procedure, the auditor shall always consider the relevance and reliability. When work of the management's expert has been used by the entity, there are three important perspectives to be done by the auditor. Evaluate the competency and objectivity of that particular expert, whether really he is an expert, because his work I am going to rely as an audit evidence. His work is going to be considered in the financial statement, whether he is an expert, and the objectivity of that particular appointment, including the independence of the expert, can be evaluated by the auditor and obtain a gross understanding the way in which how the expert has performed their work, and evaluate the appropriateness to use it as an audit evidence here. In case of a suspicion, in case of there is some other information that is available which is contradictory to that, I may be going for an extended verification here. At times, I may even use auditor's expert to cross-check or cross-verify in this particular regard. On the other hand, when management's expert is not used, only financial statements are prepared by the management and provided, then the usual verification of accuracy and completeness shall be verified, including all the disclosures, whether it has been made or not, and evaluate the sufficiency in details will be done by the auditor here. This is a major step that an auditor has to take and document that particular point, then only he may be in a position to comply with. And how to select an item for testing? Say, for example, I am doing an audit based on a sample, and then a shareholder complains that you have not done your audit with reasonable care, or you are grossly negligent. You might have verified 100%, you have gone only for a sample basis. Is it permitted or not? Absolutely permitted. Where it is permitted, SA 500 gives that. How to select an item for testing can be on 100% basis, or can be on a specific selection, or it can be even through an audit sampling. Everything is possible. I need to go and apply accordingly the procedures laid down, and then I need to go and perform the activity here. And the last point with regard to this particular essay will be when you have inconsistencies over audit evidences, or when you have doubts over reliability with regard to audit evidences, or when one information is contradictory to the other information, then how to go in for it? Which one to be considered as an audit evidence? I give an example. I have raised an invoice. The company has raised an invoice of 500 numbers that is sent to another party. So invoice says 500 numbers. The customer's acknowledgement says 400 numbers. So when the customer's acknowledgement also says 500 numbers, I'm happy. On the other hand, when one information is contradictory to the other information, when one internally generated audit evidence is opposite to the externally generated audit evidence, what I need to do? I need to perform extended audit procedure to try to resolve the conflict. I cannot conclude this is right or this is wrong. I need to go for corroborative audit evidences. Auditor always goes for this particular corroborative audit evidence to have a confirmation. Say, for example, I may extend my audit procedure by verifying the gate register, whether the number, how much they have registered for. I can also go for lorry waybill, how much numbers that they have gone for. or I can go in for the lorry weighment in this particular regard if there is a measurement item is involved. I can also go and cross verify the GRN made by the customer in this particular regard. Like that, I need to extend my audit procedures and come for a conclusion. If in spite of this extended audit procedure, I am not in a position to conclude, considering the materiality, I need to identify this as material misstatement because I don't have sufficient appropriate audit evidence in this particular regard. So accordingly, I need to go for expressing an opinion in my auditor's report as per SA 700, as per SA 705, and also document all the aspects that I have performed in compliance of SA 500 here. One of the important backbone essay that is to be complied by the auditor here. Documentation will be compliance of SA 500, the aspects involved, audit procedures performed by the auditor, and evaluation of sufficiency and appropriateness with regard to audit evidence and reporting, and conclusions reached by the auditor, all to be documented by the auditor. The very important point is that practically when we see, we may send one engagement team to do the audit, and then they might have done it, and then we may give 4 days time. After completion of audit, I want all the document paper pakka. I want the file to be made pakka. Like that, we may be instructing. At times, what happens? The moment the article assistant completes this, and then immediately he may go on a leave or another client where it is an essential activity to be completed. So we may shift the engagement team to that particular audit. The junior fellow will be given with a file. You consolidate and put it. What they will do? All file, put it, and then bundle it, and then put it documentation over. Like that, they may be going for it. That we may not understand the impact. When it comes for a peer review or when it comes for a quality review, automatically that particular documentation has to speak for us, has to speak for the work involved. So it can be even in a electronic form or in a physical form, but I need to go in for. As per SQC, the audit documentation has to be maintained for a minimum period of 7 years. That is for a not a minimum period, it is for a period of 7 years that I need to maintain. Previously, it was 10 years. Now it got reduced to 7 years. I need to maintain my documentation either in physical form or in electronic form. That is very essential for a chartered accountant to comply with. Otherwise, it will be a breach of the guidelines issued by the institute here. The next essay that we are focusing is on essay 501 that talks about audit evidence with regard to specific consideration. It's very confined essay. It talks only about 3 items. It doesn't talk about entirety. It talks only about 3 items. What are all the 3 items? Existence and condition of inventory, first item. Completeness of litigations and claims with regard to accounting and the auditor's verification. Litigations and claims for an entity, legal claims of an entity. The third one will be presentation and disclosure of segment information. That is nothing but your compliance of accounting standard or your financial reporting framework compliance. So the third one usually may not be very much practicable because of segment information. However, the first one and second one will be most frequent in our audits. We need to go and have a proper understanding of this, which talks about inventory, and the second one is about litigations and claims. Sir, who is responsible for inventory? Why inventory has been taken up so much importance? Because usually in a financial statement, inventory component will be a major component for an entity. Any entity may be, unless the company may be into a service sector. Otherwise, in a manufacturing sector, inventory will be considered to be a major component in the financial statement, which is classified as an asset, and its valuation will always have an impact on the profitability of the business. Simply, the company may shoot up the inventory value. Automatically, they will go for a higher reporting profits. I need to be very careful as an auditor with regard to inventory verification. Especially in a COVID-19 situation where there are a lot of practical issues, there are guidance also issued by advisory issued by AASB in this particular regard. I would like to have focus on that particular point. Verification of inventory. Who is responsible? Is it responsibility of the auditor or is it responsibility of the management? Primarily, it is the responsibility of the management. Management has to have a periodic inventory verification either on a perpetual basis or on a continuous basis or on a day-wise basis. They need to have a periodical verification methodology. Sometimes they may even go for a cycle. The entire inventory will be verified in a cycle of 3 years. Like that, they may have a periodical verification mechanism. The auditor has to apply the principles that are stipulated in SA 500 and also in 501, specifically with regard to inventory, because inventory valuation and its accounting and its disclosure assumes very much weightage in the financial statements here. With regard to physical verification of inventory, what is the role of the auditor? Should I need to be there or not? SA 501 says, yes, you should be there. Not only that, there is a reporting responsibility for CARO also. The auditor has to report on CARO with regard to inventory, that they say whether physical verification of inventory has been conducted at reasonable intervals by the entity, and whether any material discrepancies were noticed, and if so, whether they have been properly dealt within the books of accounts or not. There is a specific question to the auditor. Unless I go for verification or unless I verify these aspects, I may not be in a position to report. I cannot go for a generic reporting. I need to go for a factual reporting here. So it makes imperative for the auditor to go and verify the physical verification that is conducted by the management and the material discrepancies that are identified, and also to how it got adjusted in the books of accounts, what is the impact on the profits and all, should also to be examined by the auditor. In CARO 2020, the next year onwards where we are going to report, there are furthermore points. It not only talks about verification by the management, it also talks about the procedures taken up by the management. Is it reasonable or not? And with regard to discrepancy, it doesn't talk about material discrepancy. It talks about a 10% with regard to variance, where how it has been dealt with, like that. There are reporting responsibilities under CARO 2020 for the auditor to go in for specific verification. Also, SA 501 talks about it is mandatory for the auditor to be present at the time of stock taking. Again, considering the materiality level, the auditor or the audit team to observe the procedures that are performed by the management in inventory verification, how they are doing that inventory verification. And also, wherever possible, I may also go for a test check basis, inspect or that inventory or perform the test accounting that is performed by the management. Specific point to be noted by the auditor is with regard to estimation of the management with regard to WIP and slow or non-moving items. There are work in progress will have a major confusion with regard to the valuation, because stage 1 work in progress, stage 1 will be valued at 10 rupees. Work in progress stage 3 will be valued at 20 rupees. So the management may be shifting the WIP 1 into WIP 3 so that the valuation may be increased in this regard, or there may be estimations that are processed in this regard. Even your closing stock could be based on estimate numbers. Say, for example, I am an oil refinery wherein my closing stock will be on tankers, or it can be in big barrels, where it may not be precisely possible for the auditor to go for measurement. Even management may be doing the measurement on an estimated basis, wherever it is done, how it is done, and the reasonability of the estimate shall also be evaluated by the auditor. The entity may use different varieties like SCADA automated techniques, so that based on the levels that is shown in the system, they may be adopting that for valuation, or they may use the dip the dip rod, so that they may identify what is the level of liquid is that, and then they may accordingly adopt the valuation. Or they may even go in for a laser beam technique, wherein they may go for an estimation here. Where we have another interesting fact, I have attended one of the IFAC meeting where they said inventory valuation in one of the countries, say in Canada, they have huge cattle stock, livestock as their company, and then how they used to value that or do the verification will be, they used to send the drone cameras, and then they will take up the count, and then accordingly they will be going for a accounting in the books of accounts. Even in the COVID times, when physical verification, it is not possible for the auditor to be physically present, because 31st March there are cutoff, there are lockdown issues, or after that the entity is performing that, I am not in a position to go for physically. Even Zoom method or video conferencing, we may be in a position to participate and evaluate whether it is permitted or not. It is permitted because of the earlier stated SQC1 or SA 500 or your Companies Act, and also your Information Technology Act allows me to go in for that particular novel method here. And also the auditor needs to apply the cutoff procedures with regard to movement of inventory and obtain sufficient appropriate audit evidence in this particular regard, because I'm going to certify on the financial statement. Specifically with regard to documentation perspective, the auditor has to be there at the time of physical verification. Attendance of the auditor is must, or even the engagement team is sufficient. If PV is conducted at a date other than the date of financial statement, say for example, 31st March is lockdown, sir, we are doing it on 5th May, or we are doing it on 10th May, or now only we are going, July only we are performing. In that particular case, management should disclose the reason for the delayed verification to the auditor, as an auditor, I may also perform an alternative audit procedures with regard to cross-verifying or reconciling the numbers of that particular closing stock. That is, whatever that particular date, cutoff date, and then whatever the addition or the issues and closing stock can be jotted down by the auditor to arrive at the numbers. Or there are specific points like inventory may not be with the entity, maybe with the third party. Say, for example, I'm a principal manufacturer. I might have brought in the material and then I might have given to the job worker. So my inventory, which is in the books of accounts of the principal entity, maybe the stock will be lying at the third party. In that regard, it is again possible for the auditor to go for verification there at the third party's premises, or go and get a confirmation from the third party management or even the auditor of the third party. All are possible in this particular regard. Inventory under the custody of third party, where there may be a request confirmation could be there. It may be treated as an external confirmation, or I myself may do perform inspection here, or I may even get the service auditors report in this regard. That is the service organizations auditors report as per SA 402 or SAE 3402, that we can go and get that particular reports also. With regard to inventory at the control of the third party, one interesting fact, at COVID time, what happened, from one branch to another branch in a different state, the company has moved the particular lorries. It was what to say, the it is a fertilizer company which has depots all over the country. From the main manufacturing unit, they have sent to various branches, various depots of that particular fertilizer company through lorries. Huge stock has been sent. As on 31st March, what happened? The lorries, because they have moved on 20th March by itself, all the inventory has been moved on to the respective depots. But because of interstate movements, and also there are lockdown restrictions, all the lorries got stuck up in the way. So as on 31st March, it is not with the principal entities control or even under the depot's control. All are lying in the road. As on 31st March, every vehicle is there at the road. So once after the 31st March, when the first lockdown, they have removed that particular lockdown, the vehicle were in a position to move to the respective depots, and then they got that inventory. Now the question is whether the auditor who is reporting on 31st March should include this particular value of inventory or not. Where there are applications, the auditors have certain apprehensions in this particular regard. We may go and apply SA 560 that talks about subsequent events, where there is a condition at the balance sheet date and which is getting confirmed, that can be used as an audit evidence, and then you can still go in for where inventory valuation will have a very vital role. As on 31st March, it can be included as an inventory like that. There are opinions issued by AASB in this particular regard. So we need to be very careful in doing this particular activity of inventory valuation, specifically at COVID times. Can I take an escape route? Sorry, sir, inventory valuation on the date I was not in a position to perform. I am not there participating. So because of lockdown restriction, I am omitting the entire inventory verification method. I am not part of the physical verification at all. I am also mentioning the fact in my auditor's report. Is it possible? That is not possible. Please understand, SA specifically says that auditor's attendance at physical inventory count may be impracticable, maybe factors such as nature and location of the inventory. Example, where the inventory is held in a location that may pose threats to the safety of the auditor, I may not be in a position to go in for lockdown, or the matter of general inconvenience to the auditor. These are not sufficient to support the decision by the auditor that attendance is impracticable. The matter of difficulty, time, or cost involved is not in itself a valid basis for the auditor to omit an audit procedure. I have omitted, I have also disclosed that I have omitted. No, you will be treated as gross negligent in this particular regard. Where there was one old case, S.N. Das Gupta's case will come and operate, where I need to go for alternative meaning and alternative mechanism to go in for verification considering the materiality value. Always the auditors goes with the term something on materiality. Something not material, I need not bother. Even SA gives that particular relaxation to the auditor here. Specifically to be documented, extent of coverage of physical verification with the value that is done by the management and the auditor's participation. Instruction given by the management to their staff, and also instruction by the auditor to the engagement team to be documented, and it is to be communicated properly to the engagement team. Because always the effective supervision and training of the engagement team is a very key factor for our success, because it is not the engagement partner who may be practically going and sitting and doing the audit. It is the engagement team who does it, and then based on their discussion, I conclude. So it is always advisable for proper training to the engagement team and developing a proper engagement team so that the risk is getting reduced in this regard. Inventory physical verification sheets duly authenticated by the entity as well as by the audit team with regard to the physical check, time, numbers, and all. And also the extract of the copies of the books of accounts, inventory ledger, or whatever the reconciliation statement that is prepared, all book stock, physical stock numbers to show that on that particular date, this is the book stock. I need to have the extract of the number to be documented, mandatory. And then material discrepancies, if any, that are identified during the course of audit. Say, for example, non-moving item, maybe an obsolete item the company may not have provided. They may be still that is saying that as a WAP and all, but the product by itself was outdated. So I need to go and make a provision in this particular regard where there is a material discrepancies that are notified or identified by the auditor should be documented. Action taken for resolving such material discrepancies or adjustment in the books of accounts, all to be documented in this particular regard. Compliance of inventory verification and document of the same will be a major role for the auditors considering the entity's inventory control number. And the next point with regard to SA 501, we are into the litigations and claims. Litigations and claims, there is a specific reporting from the auditor's perspective also. 143.3. Apart from your AS 29 with regard to contingent liability, and also a CARO reporting with regard to disputed statutory due, undisputed item and all, where 143.3 specifically gives the auditor's responsibility relating to disclosure of impact of pending litigations on its financial position. Whether management has disclosed all the pending litigation, including the impact on its financial position properly or not, auditor has to comment on it. Yes, the company has disclosed, or the company has not disclosed, like that, I need to go for reporting here. I need to necessarily consider pending litigations. Huge possibility of auditor may going wrong in this particular regard is there something called as pending litigation. I need to first of all understand what are all the pending litigations, list of pending litigations, its impact on the financial statement, including its impact on the going concern of the entity, because litigation is something uncertain today. And tomorrow there may be a verdict in this particular regard that may even swallow the entire entity here. So I need to be very much aware that should not be a surprise to the auditor. I need to have a very careful verification in this particular regard. The source of information with regard to legal claims and litigations could be my P&L scrutiny, expenses ledger, where a prudent auditor will always go for legal expenses or consultancy charges. He may take up what are all the expenses incurred, why this particular expenses incurred, what is the reason, what is the status of that particular case can be taken up. Or discussion with the in-house legal department. There may be big corporates may have an in-house legal department. They may go for a discussion and getting a representation case-wise analysis could also be possible. Or board minutes or committee minutes. Board of directors may always have this particular MIS data. A board has to be provided with this particular data with regard to the movement in litigations and claims. What are all the new cases, how old cases got resolved, how old cases are pending, what is the forum in which it is pending, amount involved, it is expected outcome. Like that, usually there will be an MIS that will be prepared by the entity. The auditor has to obtain it. Or even I may even go for verification with regard to the correspondences by the entity to the lawyer. Entity cannot say, no, it is a confidential data. I have communicated to my lawyer. So you are not, it is no way associated with accounts of the entity. You cannot verify this. I will not give that particular correspondence file, like that. They cannot say, because my rights of the auditor under Companies Act gives my responsibility or right, power to verify any data and voucher, which includes any correspondence also, not only accounting records, but also other data can also be my audit evidence here. Also, the specific points with regard to litigations and claims could be the auditor, wherever necessary, the auditor may also obtain a direct confirmation from the lawyer. It is nothing but an external expert only. Accordingly, the opinion based on that, the numbers can be changed in the financial statements with regard to list of litigations and its outcome. There may be I may directly meet the lawyer in case of significant risk or where there is a disagreement between the management and the lawyer. I may go for evaluating the same. obtaining a management representation. I need to necessarily obtain a representation that all the litigations and claims have been properly covered, properly disclosed. The accounting, identification, accounting, and disclosure of the same all are responsibility of the management here. How the litigations and claims are identified, how it is accounted, how it is disclosed. Everything is important. The auditor has to go and verify that. Getting a management representation will also be a good audit evidence in this regard. In case of incomplete information or the management restricts you to meet the lawyer, or management does not provide you the complete information, I may even go in for issuance of a modified opinion. Whenever there is a management's restriction, it usually involves in the impact on the scope of audit. The sufficiency and appropriateness in audit evidence may not be there. I may even go in for a disclaimer of opinion accordingly. There is a huge possibility of impact. There is a huge possibility of litigations and claims not properly disclosed will have an impact directly to the auditor, because assuming that there is a case that is not disclosed at all and auditor has not identified this, then that will be treated as a material misstatement at a later point of time when there is a negative adverse remark or an adverse verdict. Then it will be directly to the auditor why you have not verified when there is a material misstatement, why it has not been provided for, or why it has not been disclosed in the financials. Like that, all the question will also be to the auditor. When I am having these data with me, these documentation with me, these are all the reasonable care and caution I have performed. In spite of it, if it is a deliberate misinformation provided to the auditor or non-provision of information to the auditor, I can very much escape from that particular liability, provided I am having these documentation and prove to the enforcing authorities in this particular regard. That's why we always insist on compliance of essays will automatically route the auditor through a direct channel in this particular regard. The next essay that we are now proceeding towards is something on essay 505. That is nothing but an external confirmation. Another important essay through which the audit evidences can be obtained by the auditor. What do you mean by external confirmation? Confirmation from a third party, not within the entity, from an outside entity with regard to any of the assertion provided by the entity. With regard to bank balances, with regard to debtors, with regard to creditors, with regard to the stock, anything can be there with regard to an external confirmation. With regard to a contract, even will be treated as an external confirmation. It is a process of obtaining and evaluating the audit evidence through a direct confirmation from the third party, where directly the third parties will be communicating to the auditor, which will be obtained as an audit evidence in this particular regard in response to an inquiry affecting the management assertions here, which includes bank balances, debtors, creditors, stocks, and other assets held by third parties or borrowings, etc., where we can go and get this particular external confirmation. Say, for example, even your credit reports will also be treated as an external confirmation, or an appraisal report, credit appraisal report can be treated as an external confirmation. A bank certification will be treated as an external confirmation. Like that, there are very high possibilities of an external information, which is a confirmation, which can be used as an audit evidence in this regard. This will be very much useful for the auditor to independently evaluate the accounting and internal control perspective of the entity also. External confirmation, physically speaking, especially in a COVID time, there are possibilities that the other party may not respond. Usually the management uses to send a confirmation request letter, which will be automatically sent to the auditor, wherein the request letter by itself will be designed in such a way that please give the response to the directly to the auditors. Like that, even it will be a prepaid post will be there, auditor's address will have been provided, directly the auditors will be reaching it. At a COVID time, where there are possibilities that an auditor may not have this information, because the other party need not confirm, the other party may not have interested in communicating to the auditor here. There is no mandatory requirement that the other party should confirm. It is only out of business relationship they do. So in order to avoid the problem of not getting back the external confirmation, the Ministry of Corporate Affairs is now preparing a consolidated database. Shortly, maybe in another 1 year's time, we may be going for a full-fledged aspect where all the company records will be available in the central database in the Ministry of Corporate Affairs, where the auditor need not approach any third party, can directly get the confirmation from the MCA, and then I may go for accounting here. It is like a web linkage network, so that the data will be obtained, and then it will be responded back to the auditors. There are also private agencies who do this particular external confirmation activity, like confirmation.com and all. They do this particular activity on a fee basis, but however, it is not so prevalent in India, but in foreign countries, they go for this. However, when the MCS initiative is implemented on a full-fledged manner, we will be having a very right information, and the periodical information can be collected through that particular source. External confirmation will play a very huge role. I will take some 5 minutes time of a practical exposure, how external confirmation will have a role in the auditor's perspective. Recently, 2 months back, COVID time, everybody is crying with regard to COVID. One person utilized this opportunity wonderfully. There was a huge bank operations from a particular company. I'll tell you the facts of this particular case so that we will understand this. There was a government company. That government company is having a huge cash and bank operations. It's a cash-rich company. So one of a bank broker, approached that particular company and then convinced the CFO of that company to have a fixed deposit of 100 crores. I'm not talking anything on air. I'm talking about a fact that happened just 2 months back. So there is a proposal to have a fixed deposit of 100 crores in a particular commercial bank. And they offered also a high interest rate. So this broker convinced the bank also and also the CFO of the government company with regard to go in for a 1 year fixed deposit. And then because of the higher rate of interest, the company also accepted for that, and then they gave a check towards the bank's name for 100 crore fixed deposit for a term of 1 year, 1 day. That is what the tenor. So they have given the this particular check through the broker. The broker also convinced this particular manager that you need to give extra interest because of the government company, and then there is a huge operations possible. I will convert entire banking into your sole banking. The moment the word sole banking is heard, the branch became very happy. So having a account, such a big account, it is worth like that, they thought. And now also they are having 100 crore deposit. Wonderful. So the bank manager was so happy, and then they have gone for creation of this particular 100 crore fixed deposit of that particular company's name. No problem, as long as this is. So 100 crore fixed deposit has been created. And in between, there are a person purported to be an accounts officer of that particular company approached the branch manager stating that, sir, we have given you 100 crore fixed deposit. Yes. However, I am going to convert all my operations slowly routed through your bank. So I want you to do me a favor. You just create one current account. I don't want any loan facility. We have huge funds, money. You just open a current account. And then these are all the documents for the current account. Like that, he gave the forged data and documents. And then he also said that he is the authorized signatory. He will be acting as the authorized signatory of that particular current account. Company, the branch was having no issues in opening a current account. Immediately, the current account got opened. And then one more request was placed to the bank. Sir, I have 100 crore deposit. You just convert this 100 crore deposit into 50 crore deposit and 50 crore transfer it to current account. So we don't want to have COVID time. We don't want to have 100 crore deposit. You just change it into 50 crore FD and 50 crore into current account so that we will use it for making payments. Okay, that is also satisfied. 100 crore FD, 100 crore current account they have transferred. And then the bank has also given a certificate for bank receipt, deposit receipt for this particular 50 crores. 50 crores as FD, 50 crores as current account. So they have given the FD receipt for 50 crores. The person who got, the broker who got this particular 50 crore receipt, or the accountant who got it, through the broker, he forged that particular receipt in another one more FD receipt was created. So 250 crore FD receipts was created. One original, other one forged document, manipulated document. These two FD receipts have given promptly to the company, where, sir, you have made 100 crore deposit. These are all the deposit receipts, 50 crore plus 50 crore. Because of the interest variation, so they have bifurcated into 50 plus 50. You have it. Anyway, 100 crores, you have it. So company is satisfied. Okay, no problem. 50 plus 50, I have 100 crore FD. They kept it in locker. They accounted accordingly. No problem. This accounts manager who purported to be from the company started utilizing the funds of the balance 50 crore that is there in the current account. He gave checks for 49 lakhs, not to get for 50 lakhs. he gave checks and NEFT transfers to various parties, somewhere around 80 to 90 parties, 100 parties for 49 lakhs. And then the entire 50 crores was swindled, gone. Only 50 crores was balanced. That is nothing but the FD. On closing, the particular auditor of this government company wanted to go in for confirmation from the bank that they have 100 crore deposit. Also provide us a certificate, bank certificate with regard to 100 crores. The bank promptly replied that we have 50 crores of deposit FD and nothing there in your current account balance is so much, like that. They have given a confirmation to the auditor. When the auditor saw it is only 50 crore, and then it got intimated to the company said that we have paid 100 crores. And then only they started investigating this particular issue. And then now the company says, I have given you 100 crores. I don't know who is that accountant. I don't know, he's a fraudster. You should have not paid that particular 50 crores. I have clear-cut instruction for you for 1 year and 1 day for 100 crores deposit. You have not, you have to honor. The bank says, no, it is because of the company we have transferred. And these are all the documents that is provided from the company's perspective, like that. Bank started hands up. So when on investigation, they identified there are internal control weakness. The bank manager should have approached the company. They might have met with the company officials. They might have taken proper approvals for dividing this particular FD and to open an account. In spite of not doing all this, suddenly, hurriedly, in hurried fashion, they have opened all this. So it is at the fault of the bank, like that. There is a 50 crore impact is there. All this, it may be a small tip of an activity, just a confirmation. That external confirmation is in a position to show this much of impact on the accounting here. Just 2 months back, these are all happened in a scheduled bank, and then many payments have been made to people in Chennai and Tamil Nadu related 49 lakhs that he paid to all the joint parties who are into that particular fraud. So why this particular incident is being insisted here is external confirmation will be a very good source of information for the auditor to obtain and collect the audit evidence and also to evaluate the audit evidence. Also, one more important point with regard to external confirmation will be external confirmation cannot be treated as an absolute audit evidence. External evidence is also to be treated as a persuasive evidence, that is something convincing but not conclusive. So other than the bank confirmation or the bank certificates, there are many other negative impact in this particular external confirmation. It may be reliable, but it is not 100% absolute in this particular regard. There are two specific points with regard to drafting this particular external confirmation has to be taken up. One is something called as positive way of confirmation request. The second one is negative way of confirmation request as per SA 505. The positive confirmation request will be in such a way that whether the confirming party agrees or disagrees with regard to my number, he will be asked to respond to this particular communication. That is something called as positive confirmation request. On the other hand, in case of a negative confirmation request, the letter from the company by itself is drafted in such a way that if you agree with the balance, you keep quiet. If you don't agree with the balance, then you respond, like that. It will be given in a negative manner. That is most negative for the auditor in this particular regard. With regard to a positive confirmation, response from confirming party, whether they agree or disagree with the information requested. On the other hand, with regard to a negative confirmation, response only if confirming party disagrees with the information requested. So there is a high possibility of the auditor may be going and making a wrong judgment in case of a negative confirmation request, because inaction by the other party may be treated as a compliance, and then I may go in for a wrong conclusions in this particular regard. So auditor always needs to advise the entity to go in for a positive way of confirmation request rather than negative way of confirmation request. Also, the parties to whom confirmation has to be sent should be selected by the auditor, and then they may have a confirmation in this particular regard, something on external confirmation, which is to be documented precisely by the auditor here. At times, there is also a intricate practical issue that the management may be requesting the auditor to skip the confirmation process by itself. Sir, we have a litigation with that particular party. Don't send the confirmation letter now. It will adversely impact our relationship, like that. There may be a request could have been placed by the management. or don't send external confirmation to any party. Like that also there may be a possibility of request from the management. I need not go and reject that particular request. I need to go and evaluate the reasonableness of the management's request. If it is really reasonable, when sending this external confirmation may adversely affect the negotiations with that particular other third party, I may go in for stopping that particular process and go for other alternative approaches to go and collect evidence with regard to the balances with regard to the third party here. On the other hand, when you feel that the request of the management is not reasonable, I may not be accepting that particular aspect. I may be communicating the same to the entity, and then there is also a possibility of management fraud in this particular regard. When it comes for a fraud, there are two types of fraud. One is management fraud and the other one is employee fraud. Employee fraud, always they have a limitation with regard to the performance, and it may be detected by the auditor. On the other hand, with regard to a management fraud, which is discussed in SA 240, where the management fraud may always have a higher risk for the auditor for non-detection, because they may override the internal controls that may not be even intimated to the auditor. So there is always a possibility that an auditor may not detect this. The possibility of material misstatement shall be very high in that particular regard. That's why auditor has to apply professional skepticism. The moment integrity of the management is at question, I need to communicate to those charged with governance. There may be an audit committee which may be having an independent directors, and then I need to accordingly decide this particular fact with regard to SA 505, something on external confirmation. Now we are into the last and most important standard for today's discussion. I hope everybody is following, the attendees are rightly following this particular discussion here. I am going for this particular essay, which is very much relevant and important, especially at a COVID time, where as on 31st March, the company may not have any issue in their operation, because in India, the COVID issue got started only from 23rd March. Our first Janata lockdown is on 23rd March only. And then only we have 22nd March, and then only we have slowly we have lockdown issues and all. So up to 30th March, no problem. 31st March, the financial statement year ending 31st March 2020, they don't have problem at all. But once 31st March is over, in the month of April, in the month of May, in the month of June, now we are in July, there are huge problem because of this particular COVID impact. There may be an impact that may affect the entity's going concern aspect. What is the role of the auditor with regard to evaluating that particular going concern of that entity? Why I have to evaluate, how I need to report, is what exactly today's discussion that we may be in a position to cover in the next discussion period here. Please understand, this SA 570 got revised and it is applicable from the last year. Pre-revised SA 570, the impact is different. Post-revision SA 570, the impact will be different, including the reporting change. Previously, the moment we think of going concern, always we will be thinking of going concern is a fundamental accounting assumption, where consistency, accrual, going concern are the three fundamental accounting assumptions like that we go in for, because AS1 also talks about it, and then we go accordingly. However, after SA revision SA 570, going concern is no longer an assumption. Going concern is the basis of accounting. The basis of accounting by itself is going concern basis of accounting. There is a huge change with regard to the impact on this particular SA 570 going concern. Under the going concern basis of accounting, the base of my accounting that I am preparing the finance statement by itself is on this particular going concern here. So it is no longer an assumption. It is a going concern basis of accounting. The financial statements are prepared on the assumption that the entity is a going concern and will continue its operation for a foreseeable future. Another important terminology, foreseeable future, means for at least for a period of 12 months from the date of the financial statement, the entity is not having intention or necessity for shutting down its operation or liquidation. That will be treated as a going concern basis of accounting. From 1 year from the date of financial statement, I don't foresee any problem with regard to shutting down its operation. The company is trying to go for the foreseeable future. It is not the company will be having operations forever. No, that is not the assumption that is being made in the going concern. it is for a foreseeable future, at least for a minimum period of 12 months. The entity will be continuing its operation. It doesn't have any necessity nor reason to shut down its operation will be the activity here. So the estimation or the validity of this particular assumption is drafted directly to the entity. It will be to the management of the entity to go and evaluate the appropriateness of the going concern basis of accounting. It is not the responsibility of the auditor. The evaluation with regard to going concern and its appropriateness for the entity to continue its operation will be that of the management of the entity. Even section 134.5 that talks about directors responsibility statement under board of directors reporting will there is a direct question to the directors, board of directors, that they need to evaluate with regard to appropriateness of the going concern basis of accounting. And the auditor's responsibility now here is whether the estimation or an evaluation made by the management with regard to going concern basis of accounting is valid or not valid. If it is valid, how it is to be reported. If it is not valid, how it is to be reported, and all is the new SA 570's discussion. There is an important point that we need to go and understand here, including the extended responsibility of reporting under SA 700. I think in the previous seminar with regard to standards, we might have taken in SA 700, there is a specific inclusion of a particular paragraph with regard to going concern. I can no longer use the old method for my reporting. I need to use a new method in this particular regard. Let us go and have a fullest insight in this particular reporting at ease. The objective of this particular essay 570 will be an important essay. Documenting is something very important. My experience will play a very vital role in evaluating the going concern impact. Is to obtain a sufficient appropriate audit evidence regarding and to conclude the appropriateness of the management, the use of going concern basis of accounting in the preparation and the presentation of financial statements, and then to conclude based on the audit evidence about whether a material uncertainty exists. It is an important term that we need to remember. We need to carefully, cautiously verify while doing the audits, because 31st March closing, we will be nowadays we may be starting up the audit, or we might have been in the process of doing that particular audit. We need to necessarily evaluate, is there any material uncertainty? What do you mean by this? Relating to the events or conditions that may cause significant doubt on the entity's ability to continue as a going concern has to be evaluated and to be reported according to this particular essay. They need to go for verification here. The term material uncertainty is considered to be very, very important. Documenting the fact is something considered to be very, very important. What do you first of all mean by the term material uncertainty? Material uncertainties are those events or conditions which are transactions which may cause significant doubt on the entity's ability to continue as a going concern, that should be disclosed in the financial statements. Very, very, very important point. It is to be disclosed in the financial statement. If it is not disclosed in the financial statement, that itself will be treated as a material misstatement, because my financial statement may be materially misstated not only with regard to my numbers but also my disclosures. Material misstatements may be because of inappropriate accounting policies or inconsistency in application of such accounting policies, or even inadequate disclosures may be considered as a material misstatement here, where a material uncertainty, if it exists, it is to be mandatorily to be disclosed. If it is not disclosed, it shall be treated as a material misstatement in this particular regard. Those events or conditions that may cause significant doubt on the entity's ability to continue as a going concern. The moment there is a material uncertainty, immediately going concern is affected. Like that, I cannot conclude. Material uncertainty is only a red flag. There is a very high possibility of material uncertainty converting into going concern issue. The going concern could be likely to get affected. The auditor has to evaluate along with the management's evaluation whether this material uncertainty causes the continuity with regard to the entity's going concern or not, has to be evaluated and then to be reported accordingly. Please understand, there are a lot of examples that is given in the standard by itself with regard to material uncertainty. What can be material uncertainty? It is also termed as significant uncertainty, but in India, we always use the term material uncertainty only. the factors that indicates going concern assumption will be treated as a material uncertainty, which is basically divided into different parameters. Maybe a financial indicator, or maybe an operational indicator, or environmental indicator, like that. There are indicators that could affect the going concern here. Let us going for understanding this. Fixed term borrowings approaching maturity without realistic prospectus to repay for that entity could be treated as a material uncertainty here. Say, for example, the company has raised debentures, and then now it is the time for the company to redeem that particular debentures, or there is no realistic prospectus to repay, will be treated as an material uncertainty in this regard. Or it can be even an adverse key financial ratios, or your say, for example, your liquidity ratios or your CRAR compliance may not be there, or excessive reliance on short-term borrowings to finance the long-term assets or long-term resources. Even CARO 2020 is having this particular question, whether short-term funds have been used for long-term purposes or not. Previously, under CARO 2003, there was a question similar. Now, once again, there is a question on this particular CARO 2020. Also, CARO 2020 asked one more important question to the auditor, very important question. Based on the evaluation of the auditor, is there any material uncertainty with regard to the company not paying its liability within a period of 12 months time from the date of balance sheet? Like that, I need to go and report under CARO. So there is a huge responsibility for the auditor, wherein I need to evaluate with regard to the ability for the company to repay its creditors or its liabilities within 12 months from the date of balance sheet. Like that, I need to go and evaluate. Nothing but one of these sort of going concern assumption evaluation only, where there are possibilities that the company may have may not have the working capital. So there is a working capital crunch by itself will be treated as a financial indicator. Understand, these indicators immediately doesn't automatically result in going concern impact. The company may have mitigating mechanism. The company may have other alternative resources. The company may pull the investors. The company may further infuse funds. If they have alternative resources, if the company is in a position to manage it, no problem. It will not affect the going concern. But however, it is to be disclosed in the financial statement. And auditor has to really evaluate whether it affects the going concern or not. And if it is not, then it will be treated as a going concern impact. And then I need to go and report differently in this regard. Or other parameter could be substantial operating loss. It is not a normal loss that we are talking about, because in a business, always there is a possibility of profits and losses. We are not talking about that. We are talking about a substantial operating loss. Say, for example, your net worth got eroded. In that particular regard, I lost my entire market. My market share got lost. Then it may impact on the going concern impact, or inability to pay creditors and due dates, maybe a working capital crunch. That itself is a very good indicator for non-payment. Especially in COVID times, many people may have this particular problem. It is not that immediately your going concern is affected. You need to go in for alternative mechanism or the cash flows of the entity, or a projected inflow cash flow projections of the entity, to really evaluate whether going concern assumption is valid or not valid. Going concern basis of accounting is proper or not proper has to be documented carefully, has to be evaluated by the auditor carefully in this particular regard. Or there may be a loss of a major market because of the technology change, or because of the time factor, or because of the obsoleteness, or because of the change in the customer's taste, could also lead to loss of a major market. That is an indicator for having an impact on the going concern. Or shortages of key raw materials. This is the raw material through which I produce my product. That raw material I am not in a position to procure, or that raw material is not available. I don't have alternative resources to go in for production. Then it may be treated as it may be having an impact on the going concern, which will be treated as a material uncertainty in this particular regard. This is very, very, very practical. Huge labor turnover could be there, or there may be a labor unrest, especially in COVID times. This is exactly happening. Something called as migrant labors. They have went back to their natives. So in industrial areas like a manufacturing entity, which is totally dependent on the labor sector, or a labor force, or a skilled force, and that is available, I am not in a position to produce to the cater the requirements. Because of that, my contracts could have been cancelled. Because of that, there could be a huge liquidated damages should be paid by the entity. All this may have an impact in this particular regard. I need to go and validate the alternative resource. If it is not, it may have an impact on the going concern assumption of the entity here. Or this is very important. Again, we have already discussed with SA 501, where there may be a pending legal proceeding and claims from which could be substantial, where the company may not be in a position to repay. So there may be a going concern impact. The going concern got affected. Say a very classic example will be the telecom companies, where there is a huge money that is pending to be paid to the tribe, and then the case is now with the Supreme Court, where if at all they are not in a position to repay, then it will be when the adverse judgment has been provided on these operators, then there is a high possibility that there may be an impact on the going concern here. Also, with regard to cement manufacturing companies, there are certain Competition Commission of India has issued some notices with regard to cartel, and then there are huge penalties have been levied by Competition Commission. The cases are there pending at the Supreme Court. When assuming that the adverse judgment is there on that particular company, it may have a huge impact on their operations here. Need not be only money related point, maybe a licensing issue also, where environmental pollution, there is a pollution control board has taken up this particular issue, and then case is pending at Supreme Court. Assuming Supreme Court goes with the pollution control board, the company may be shutting down its operation, and then they may not operate it here. Or there may be a child labor issue, where the Labor Protection Act comes and operates, and then the licensing of that particular entity might have cancelled. So my entity may not be a going concern entity in this particular regard. Or there may be a non-compliance of a law or a regulation. Again, maybe a non-compliance may lead to cancellation of my operations and cancellation of my license. That will affect my going concern adversely in this regard. Or there can even be an example of changes in a law or a regulation by the government. Government bans your product or the entire source through which this particular product has been done, then it may be treated as a going concern impact here. Say, for example, plastic and plastic related products. Last year, many state governments have banned that particular specific type of plastic related products. So when I am into that particular industry, I don't have any other alternative diversified business. My entity may be having an impact on the law or a regulation by the government here. So all these are all only factors or only examples of material uncertainty that could cause a significant doubt on the entity's ability to continue as a going concern. So the auditor has to be very carefully watch whether really your going concern is affected or not affected. Or there may be an insolvency case that can be taken up against the company, and then there may be resolution professionals could have been appointed. All these are all indicators, material uncertainty, where the auditor has to evaluate and then accordingly conclude. So there is also an extended reporting under SA 700 with regard to management's responsibility paragraph. We need to very clearly state that it is the responsibility of the management to evaluate the basis of going concern accounting. Management's responsibility for assessing the entity's ability to continue as a going concern, and whether the use of going concern basis of accounting is appropriate, as well as disclosing the matters relating to going concern. All are the responsibilities of the management. Then what is my responsibility? I need to go and evaluate whether management's evaluation is proper or not. Is there material uncertainty? If it is so, how I need to go for a reporting here. Describing the auditor's responsibilities regarding going concern, conclude on the appropriateness of the management's use of the going concern basis of accounting, and the audit evidence obtained, whether a material uncertainty exists relating to events or conditions that may cause significant doubt on the entity's ability to continue as a going concern. If we conclude that there is a material uncertainty, we are required to draw attention in the auditor's report to the related disclosures in the finance statement. If such disclosures are inadequate, I need to go for a modified opinion. I'll take a practical scenario. Say, for example, because of this COVID, there are huge economic crisis that is happening all over the globe, not only in our country, all over the globe it is happening. Some industries do well, some industries may not be in a position to go in for. Say, for example, FMCG sector and all is doing very much good in spite of the COVID because of the consumption. On the other hand, there are certain segment or industries which are badly affected. Your transportation sector, your hospitality sector, say for example, a hotel or a 5-star hotel or a tourism spot, is our hotels are largest accommodation facilities that are provided and all badly affected because of this particular COVID year. Even hotel industries, sweet confectionaries got affected like that. There are a lot of impact on these companies. Assuming that there is an impact, because in the hotel industry, what happens usually, there will be a fixed cost for their maintenance and to uphold their infrastructure, including the maintenance of that particular hotel. However, there may not be any revenue at all, or their peak period has gone. Usually the May month, the April, May, the vacation period will be considered to be an important revenue generation period for certain sectors and certain places. Geographically also, say for example, certain tourist spots like Ooty, Kodaikanal or Munnar and all is totally dependent. The entire year is dependent on that particular period, when that particular period is fully under lockdown. So you may not have the revenue at all. So there is a possibility of you not repaying on the due dates, and then there are other repercussions could be possible, which causes material uncertainty. The management's evaluation of the same and the auditor's evaluation play a very vital role. It has to be disclosed in the financial statement. Judgment will be based on the circumstances. Application of the knowledge will be very much required from the auditor's perspective with regard to make an informed decision here. And then I need to conclude with regard to the auditor's report with regard to future events or conditions which may cause the company to cease and continue as a going concern here. Now there are scenarios possible. The reporting change with regard to revised SA 700 and pre-revised SA 700. Usually we used to give only emphasis of matter paragraph in the auditor's report in the pre-revised SA 700 para when going concern impact with regard to material uncertainty here. Instead of the earlier requirement to report material uncertainties with an emphasis of matter paragraph, now the change reporting a material uncertainty is now required to be made within a separate section of the auditor's report titled material uncertainty relating to going concern. Like that, I need to have a separate heading. In that particular heading, I need to draw attention where the management has disclosed that, and then I need to talk about that particular material uncertainty. So even your Jet Airways report, the auditors, there is a conflict of Jet Airways, where the last audited financial statement, the auditor was stated only on an emphasis of matter paragraph, and then he gave a clean opinion in this regard. However, immediately after 2 months' time, the entire entity lost the going concern, and then they lost their shut down their operations in this particular regard. So the point that I am driving here is, it is not with an emphasis of matter paragraph, it is with regard to material uncertainty relating to going concern paragraph. We need to go for reporting here. I'll come back for key audit matter. This is what a comprehensive chart that we need to analyze various situations practically. This will very much help you to go and conclude how it is to be done. Say for example, in a situation there is a material uncertainty is there. It has been properly disclosed by the management in the financial statement. However, it doesn't have impact on the going concern. Going concern basis of accounting is still valid. If I conclude like that, then what auditor has to do? The reporting activity by the auditor will be include a separate section in the auditor's report under the heading material uncertainty relating to going concern, and then you include that particular paragraph, and then you can give a clean opinion, no problem. On the second hand, when there is a material uncertainty, however, it has not been disclosed properly by the management, but your going concern basis of accounting is still valid. In that particular regard, the auditor needs to convince the management to go for a proper disclosure. When the management does not adhere to the auditor's view, then I may go in for issuance of a modified opinion, because it is an uncorrected material misstatement which is having an impact on the financial statements, material impact on the financial statement, because material uncertainty, as the name denotes, it has to be disclosed. Non-disclosure of the same will be treated as a material misstatement. I need to either go and issue a qualified opinion or adverse opinion in this particular regard, disclose the fact of inadequate disclosures also. On the other hand, the third point is, when the going concern basis of accounting by itself is inappropriate, then I cannot go with any other option other than going for adverse opinion. When going concern by itself is lost, but the management has preparing the financial statement on the going concern basis of accounting, it at any way doesn't reflect true and fair view. So I need to go and provide only adverse opinion stating that it does not reflect true and fair view. Like that, I need to go for a conclusion with regard to my reporting. Also, sir, can I, instead of give a material uncertainty paragraph, can I give it as a key audit matter paragraph? Essay 701 talks about key audit matter paragraph, which is also a new essay. As of now, essay 701 is applicable only for a listed entity. In case of other entities, if the auditor wants to disclose, he can go in for. However, the matter of going concern and material uncertainty cannot be treated as a key audit matter. It has to be given under a separate paragraph under only. When it can be treated as a key audit matter paragraph? When identify there are events and conditions that may cause significant doubt on the entity's ability to continue as a going concern, and it is not considered to be a material uncertainty, and if the auditor concludes that disclosures relating to those events and conditions are adequate, then I may go for a key audit matter. Otherwise, it cannot be treated as a key audit matter. When no material uncertainty exists, then only I may go for a key audit matter. Otherwise, I cannot go and issue that matter as a key audit matter. I need to go and give it as under SA 700 material uncertainty matter only in this particular regard. Please understand, providing a key audit matter is not a substitute for your audit opinion. It's not a substitute for your modified opinion. Key audit matter is only to draw attention of the most significant matters that are already communicated to the management, which is to be communicated to the shareholders. I am putting it as a key audit matter, and that cannot be a replacement for my regular paragraph here. On the other hand, sir, in an audit, there is no problem with regard to going concern at all. The going concern, there is no problem. Material uncertainty is also not there. Should I need to still include a point that there is no material uncertainty? You need not. You can ignore this particular fact, but you need to document this particular aspect. All this has to be documented. Then only the auditor may be in a position to comply and convey to the world at large that he has complied the audit as per standards on auditing. That's it. With this, I conclude my today's deliberations with regard to the standards. I keep the last 10 minutes for deliberations. You may have certain practical queries or something like that. So in order to have that, I thought I can have a 10 minutes discussion for question and answers. See, please understand that the standards on auditing are considered to be a very good ocean. If you have the proper skill of swimming, you may be enjoying the entire ocean here. I always earnestly appeal to members, you are all having good practical exposure. Please take some amount of time and energy to go in for applying and reading out this particular standards on auditing, which is applicable to all the entities here. Also, Institute AASB has come out with a nice documentation, something called audit compliance of standards on auditing with regard to small and medium enterprises. So not a large scale, even for a small and medium enterprises, how I may be in a position to comply with. There is an exclusive booklet available provided by the AASB. So it will be a useful document. Also, there are a lot of implementation guides that is issued by AASB in this particular regard, which will be very much practicable. Various scenarios have been discussed in this particular regard. We will have a wonderful discussion over all those particular items. I earnestly appeal to people to go in for reading out those items and then to prove to the world at large that we always comply with whatever the requirements that is imposed on the auditors here. We are the number one people to comply with and satisfy the requirement of various others also. With this, I take the opportunity to thank the branch, the chairman, as well as the secretary, and also all the management committee people for having invited me to have a wonderful deliberation with you all people. And I also specifically thank all the participants for your patient listening. Your experience is by itself will be a learning factor, and then your motivation, your presentation and participation will be always a motivating factor for the speakers like me. Thank you, the organizers. Over to you. And I am open for any questions in this particular regard.
Thanks a lot, sir. Dear members, we are going for an open floor. So if you have any queries, you can just raise your hands.
Yeah, CA Balaji, can I ask a question? Yeah, regarding this external confirmation, suppose a company is having a lot of debtors from Dubai, and as on 31/3, getting confirmation as on 31/3 is always difficult from Dubai because their closing is always 31/12. And
Okay.
you know, their audit procedure and all are not that strict in Dubai.
Okay.
So
Okay.
the 31-3 balance always will have a lot of differences. So what we
Yes, sir.
used to do is from 31-12 previous year's audited balance sheet, we will get the balances from that amount, and then we will have a reconciliation up to 31-3. So which
Okay.
one will be more better? The confirmation given by the client as on 31-3 may not be that much reliable compared to the other figure. So can I adopt
Okay.
that this one, or which one would be more better?
Yes, sir. I totally got your point. It's a very valid question, especially in an international transaction like that, where we go for reliability with regard to the audit evidences. Where, sir, SA 505 talks about external confirmation by itself is a corroborative audit evidence only. It is not considered to be the sole point. At time, in an audit, I may even skip an external confirmation process by itself. No problem. It is also permitted in this regard. Based on the audit, other external other audit procedures, when I am in a position to have satisfactory evidence with regard to the numbers, I am fine with that. With regard to your specific question of going for a date, it is again reconciliation is possible. That's why even in inventory we have taken up that there is a cutoff procedures has to be applied by the auditor in this particular regard, where there will always be a reconciliation item. My numbers and the other number need not tally always. I do accept that because of the transitional accounts or the numbers that is not accounted in both the ends in this regard, a reconciliation will be sufficient. However, the reconciliation should be made by the management and certified by the management here. And coming back to your specific question, should I need to get it unaudited as on 31st March from the client, or audited 31st December the previous year, will be a very important one. I go with you that audited number will be a better one, and then to go for a reconciliation with regard to 3 months transaction, and then get it confirmed once again by the customer here, so that I have a double confirmation, one from the audited number and also the recent confirmation from the party. Anyway, it is going to be acting as a confirmatory audit evidence only. It will add value to my audit evidence, sir. Yes, sir.
Thank you.
Wonderful, sir.
Members, if you have any doubts, please, you can just Shilpa ma'am, you can unmute yourself.
Good evening, sir.
Good evening, madam. Tell me, madam.
Yeah, you had been speaking about the inventory matter. And as you know, none of us were able to go take any inventory during the year end. That is on 31st March 2020. And even after that, to physically check the stock in case of an Ayurvedic industry or a factory, quarterly is not possible for us, because physically to be present at a place is not easy for us. So what would you advise, whether it can be an emphasis on matter, or what could be the kind of disclaimer which an auditor should give in the case of inventory?
Yes, madam. Madam, as we have discussed the same point, where non-verification of a particular item cannot be a disclosure of the same, cannot be a recourse for the auditor in this particular regard. Always there is a possibility of alternative methods available in this regard. As you have rightly pointed out, to say, for example, it is in a pharmacy or an Ayurvedic company, where as on 31st March, I am not in a position to do. Yes, this is actually a difficulty that is posed. It may be treated as a key audit matter, where key audit matter will be always a matter to be communicated to the management, and complexity is involved in that particular issue, and then how the auditor has taken up the further audit procedures in resolving that particular issue. Where 31st March, I am not performing this particular physical verification, no problem. Management might have complied with that particular 31st March. Assuming management is also not in a position to open that entity, assuming they do it on some April 15th, it is possible for the auditor to go in for a later point of time. SA 501 very much advises that there may be an impracticable situation that an auditor or the engagement team may not be there on 31st March. Still, if the inventory is done on a different date, even in my presentation, I have discussed that particular point. When it is on a certain other date, it is possible for us to go for a verification. However, I need to go do the reconciliation as the previous case. I need to do the reconciliation, whatever the inventory inflow, that is, assuming that I'm doing it on 15th April. From 31st March, whatever the inventory inflow, GRN, that is made, and whatever the issues that is made or sales that is made and the closing stock to be arrived, and that is to be matched with the book stock on that particular date. So it is nothing but a reconciliation activity to be done. If I am satisfied in this regard, I need not go for provision of a modified opinion in this regard here. When I am satisfied with regard to the inventory number, I can keep this item as an key audit matter, and then how extra audit procedures has to be performed, and then I can go in for, instead of providing an emphasis of matter. When emphasis of matter can be provided, it is very important point to be understood. SA 706 talks about emphasis of matter. Emphasis of matter is a matter that is already disclosed in the financial statement, which is fundamental to the user's understanding of the financial statement. If something which is fundamental to the user's understanding, then that matter can be treated as a emphasis of matter that should have been disclosed by the management. It is not that I can give that particular disclosure instead of the management and I can go in for. No, that is not possible. It is to be taken up only from the management's perspective. Management has to disclose that. Then if I feel that it is fundamental to the user's understanding, I may refer that particular, to draw the attention of the management only. I can, the objective is by itself is to draw the attention, not to escape my liability, or not to caution that I have not performed. That is not a route, that is always not advisable, not permitted also. So it will be key audit matter will be an advisable one. You may communicate first. You need to communicate to the management that you have not done it on 31st March because of these reasons. You can put it, and the management may also take it up when it is to be performed. Say for example, they are performing only in the month of July. Now only I am doing it, sir. Is it permitted? Wonderful, yes. There is no time period that is stated where entire world understands the difficulties that are faced, including the physical and health issues of everyone involved in this particular regard. So it can be on July also. Now 20th July also you can go there and then do a physical verification, and then you can go back and reconcile. As on 31st March, this was the number like that. I can very much go in for and provide that particular report, madam. Also, to get a management's representation in this regard will suffice this requirement instead of going for an emphasis of matter paragraph.
Thank you.
Thank you, ma'am, for this.
Thank you. Thank you.
Any more doubts, dear members? You can just raise your hand. Sir, I have a question from my own end.
Please, sir.
Sir, I was just reading the report that the home sales has dropped to a 50-year low of around 54%, and that the commercial real estate has the scope of commercial real estate has diminished because of this, especially this work from home culture also. So if we are going for this audit of these real estate companies, which are highly leveraged also, already they are struggling to meet their finances straight away. Now, if we look into the going concern of the same, how can we do the due things regarding the SF5 applies? Can you just throw some light on the same?
Yes, sir. Very good question here. Again, with regard to real estate sector, always there is a problem even in your accounting. That's why I told you inherent risk. Your audit risk is based on inherent risk, control risk, reduction risk. The inherent risk in a real estate sector by itself is very high because a lot of estimates, and it's based on assumption only. The real estate promoter thinks that the 100 property that he is constructing will be sold in 1 month time, may not take that. So also there is an impact, economic crisis. People may not be immediately going for purchases and all. It's really a tough time for those people who are into business. And we need to go for the realistic estimates of the management with regard to their cash flows, sir. So in a given case where for the past 6 months, there is no movement at all with regard to the sales, as you are pointing out, the sales got dropped for 54%. And then there are also further diminishing with regard to their realizing income and all. Your cash crunch need not be a only factor for your continuance of your entity, where you need to go in for other factors also to be looked into, where you have other assets which can be realizable, and then you may be in a position to continue your entity will be a factor for evaluation. That evaluation has to be done by the management. I need not do that particular evaluation. Management has to do with on a realistic basis. They need to prove and substantiate their basis of going concern is valid or not. At times, practically speaking, sir, all the management is nothing but auditor. Sir, you need to do, you evaluate like that. Practically, there are helping hand that may be done it. may not be for a high level players, maybe for small level players where at times we may go in for verification of that. In that case, we need to be very serious with regard to the, even say for example, it is not it's a private limited company, and then husband and wife, and then they do this particular real estate, and then they don't have inflows and all. Then there is a material uncertainty. It is very much highly advisable to go in for a material uncertainty. Material may not be a negative factor, because I'm just drawing attention on this particular uncertainty. Otherwise, assuming that the client will say, sir, please help me. If you go and give anything like this, the banker may not give me loan. So please save me. Don't put anything like this negative. I may not access to the bank funds at all, like that they may request. Assuming that I am considering the impact and humanitarian grounds, I go not to brought this under my audit report at all. Just I'm talking in a hypothetical case. Assuming that I'm giving a clean opinion, not drawing anything with regard to the material uncertainty related to the sectors, I have signed the balance sheet, finance statement reflects true and fair view. It will be immediately taken up to the bank for getting a loan, assuming bank goes for that loan, and in a very remote possibility, the client goes insolvent and the recoverability is getting affected. Please understand, bankers go and directly report to institute for taking disciplinary action for the chartered accountants. Bankers directly go and approach. Two balance sheets are signed by an auditor, one for another purpose, this for another purpose. So I am not, that's why the UDIN concept by itself got evolved, and now we are having it. Bankers directly approach the zonal office. I know personally, 1992 case, a bank audit, concurrent audit has not verified a particular point because of the problem at the bank end. 1992 case, today institute is declaring that the chartered accountant is disciplinary, is for taking action, is guilty of professional misconduct. 1992 case. Why? Branch manager, the zonal office taken up, and then it is fighting, and then now only it got released. When it comes for disciplinary action against the auditor, nobody will come for our rescue. First, let us rescue ourselves. Let us do with the professionalism. It is all humanitarian grounds, and saving the client and going for the business is absolutely right. But within the parameters or within the four corners, that is, I am eligible for. If something I myself is not eligible, I may not go something extra. And then when it comes for the question, nobody is there to save my skin. I need to protect it. I need to go for proper reporting. Then I may go for it. So in a given case, when there is a 54% of a drop, and there are impact on the COVID, also there are cash flows are getting affected, and the realistic flows is also not there. I feel that there is a material uncertainty. The fact can be reported by the auditor, and the management has also to disclose the same in the financial statements.
Okay. Thank you, sir. Thank you.
Thank you, sir.
Any more doubts, sir? Yeah, I think. Sir, you can unmute yourself. Sudhakaran, sir.
Sudhakaran, sir, you can ask your question, sir.
Sudhakaran, sir.
I think he's not able to unmute.
No, he has unmuted himself, sir. Okay.
Any other question, Ajit?
No one has raised their hand. Just to continue, I can ask. I have a doubt with that audit evidence, sir. Sir, if you permit, you well pointed out one fraud that you had that had came into your thing. So
correct.
during
my
this
observation, it is some other. It's a bank notification.
No issues, sir. So in this time, COVID times, we are using this most of the audit procedures, or we are doing at our office itself. We are seldom visiting the client, so we are relying lots on these scanned documents and things. So if we are looking into this scan documents, there are lots of softwares through which this scan documents can itself be manipulated. So can you throw some light into which we can have some additional affirmations and things?
Yes, sir. Yes, you are very much valid with regard to your question, whether to rely on this scanned document or not. Because of the inherent problem, we are not visiting the client so that the physical access is not available. In that regard, scanned documents can be very much reliable, sir. Yes, we need to apply SA 315 that talks about internal control evaluation. So first of all, we need to understand the internal controls of the entity so that the errors and frauds impact on the numbers. And also we can rely on that particular document, because nowadays everybody goes with the digitalization, and the physical documents and all are even not available. All are electronic form, where SQC1 says that even scanned documents can be relied. However, I can rely that only based on my evaluation of the internal controls of the entity. In an automated environment, what are all the specific points? 5 panchatantras have been said. Whether the management is aware, whether control objectives have been stipulated, whether they are implementing this particular design, implementation, maintenance of internal controls are the responsibilities of the management. Whether it has been taken up properly or not has to be evaluated. And then I can go in for considering that as an audit evidence. Again, as you pointed out, this can be treated as a key audit matter. I may be communicating to the management that this is a difficulty, this is a complex issue, there is a possibility of fraud. Anyway, if it is a fraud, I am not at all responsible. Whether it is intentional or not, where the moment there is a fraud, it is not my responsibility to detect it. However, I should have applied a reasonable care and caution. I should have taken professional skepticism, where in other cases it is not available. I may get a representation from the management. Management representation cannot be the sole audit evidence. It can be a corroborative audit evidence to the existing available one. I can get a confirmation from the management, and I can report it under 701 key audit matter, and there ends my liability, sir. I need not go for negative reporting or modifying in my auditor's report. I can very much provide. On the other hand, if I feel the data by itself is not provided to you, scanned documents are there, I am not in a, sir, big files, sir, I am not sending you, sir. Like that, when I am not in a position to rely on the data, or the data by itself is not provided, it causes a significant difficulty for the auditor. SA 260 has to be applied. It talks about significant difficulties encountered by the auditor, including non-provision of this particular data. I may be again considering it as a 701 perspective. If it is so significant that I am not in a position to have audit evidence, your SA 705 will be applied. Sufficient and appropriate audit evidence is not obtained, I may go for a qualified or a modified opinion as the case may be.
Okay.
Yes, Ajit, please check whether Sudharan sir is ready.
No, I think he has unmuted himself. But sir, we have Uday Rao sir raising the hand. Sumesh, can you just unmute him? Sir, you can just unmute yourself, sir.
Yes, sir. If the board of the directors, majority of the board of the directors backs a manager who is doing fraud, what is the position of the auditor?
Very practical question, sir. When the where there is a fraud, when the auditor identifies that there is a fraud, and the board of directors are,
he is not giving the evidence. The manager blocks the evidence.
Okay, manager blocks the evidence, and then you are
and the board backs him.
Backs him. I may withdraw from the audit engagement. That's what SA 705 talks about. It is a significant difficulty restriction. Again, assuming that there is a fraud involvement, I feel that there is a fraud. I need not confirm that there is a fraud. I suspect there is a fraud. There is also a possibility of 143.12 reporting, sir. Even I may, if the fraud value is 1 crore or above, I need directly report it to the central government. I don't bother about management's response. I need to communicate to the management. Assuming management is silent in this regard, I may directly communicate to central government about this particular fraud, and it will be taken up. Also, there is a fraud reporting responsibility under CARO. I need to go for reporting. It is all, nobody can stop my reporting here. They may back up their perspective. I may very much go in for my own opinion in this regard. I may go for a modified opinion or even withdraw from the engagement. Resignation will cause a huge problem for the entity. You take it. See, you have asked a very pertinent question. Assuming I resign from the entity, in that particular case, it will become a casual vacancy for the entity. Management cannot appoint another auditor just like that. They need to go and get the shareholders' approval. Then only that casual vacancy appointed auditor can be continuing. Also, the incoming auditor has to communicate to you first. Then only they can accept the auditor's appointment. You can very much give the difficulty that is faced. The incoming auditor shall not be in a position to take up the audit in that case. So there are all other checks and balances are there that is coined here. It's a very unfortunate situation when the board by itself backs the person, then a disclaimer of opinion could be an option.
Sir, if my position is as an internal auditor, what will?
Okay.
Internal auditor, you don't have any reporting responsibility to the shareholders, as the case may be, sir. You can very much communicate to the management, and that's it. That's the end of your responsibility. The scope and responsibility by itself is very limited, where I can report it, and if the management doesn't want it, wonderful. I don't want. Kingston cotton mill case will apply. I'm just a watchdog and not a bloodhound. So I barked. I done my job. Okay, you take care. You yourself doesn't want it. Get the fees properly from them. Enjoy the fees.
Okay, sir. Thank you.
Yes, sir.
Can we conclude, Ajit, in that case? It's 5:15.
Yes. I think Shilpa ma'am has raised her hand once more. Ma'am.
Yes, sir.
Yeah.
One more question, sir.
Yes, ma'am.
The thing is, many banks do not issue balance confirmations these days. Can we rely on a bank statement instead of a balance confirmation?
No, bank certificate they have to provide, madam, on a specific request. They have to provide a certificate. It is out of a business relationship. They are used to give this particular bank confirmation. If they specifically doesn't provide, or they specifically negate that I need not give a confirmation bank confirmation certificate, we may go for a bank statement. However, the problem with regard to bank statement is there are certain other debits that may be raised by the entity, may not that may be given by the banker, may not have accounted by the entity here. So that may create a problem. But anyhow, it is an audit evidence that I can rely. Where bank statement I can.
They are providing attested bank statement, attested by the bank manager. Is it enough?
However, bank certificate will be the most reliable activity. If not, we can go with the certified bank statement, madam. Yes. Okay. Nowadays, the frauds that is taken up at every magnitude. Banks, there are huge frauds even. I don't know whether you are aware about it or not. Last week, there is a fake branch of SBI identified in Tamil Nadu.
Yeah. We heard
the branch by itself is a fake one. And the question of account statement is and all. So the new innovative way in which people think and then they do frauds. Always it's a reasonable expectation. Professional skepticism is what expected. Again, if it is a fraud, I am no longer responsible. I need to prove that I have taken reasonable care and caution. The problem is when there is a fraud, I am not in a position to prove this. I have taken reasonable care and caution. I will be responsible for non-deduction of the frauds, but for not exercising your reasonable care and caution. So I will also get caught under that particular tangle. So we need to do the job with professional skepticism, and nothing more than that is sufficient, is expected from our end, madam.
It's clear, sir. Thank you.
Thank you, madam.
Sir, I think that's the end of the questions. You may go for that concluding remarks, sir. Chairman, sir.
Yes, it was really a very informative session, CA Balaji.
Thank you, sir.
Especially your membership in Auditing and Assurance Standard Board. That went very handy, I'm very sure, having heard your speech today. And your formula, that 2 + 3 formula,
yes,
that
sir.
is wonderful. 2 in mind and
yes,
3 in fingers. And
yes, sir.
hope all will go a long way with the professional judgment and the professional skepticism in mind. So we are all enriched with your knowledge and your experience. Thank you very much for sharing with Thrissur branch. We are all looking forward for a personal meeting with Thrissur branch, at least next year definitely will be calling you.
Yes,
Thank
sir.
you very much. And now
Yes.
for a formal vote of thanks, let me call upon CA Ajit, my secretary. Please, Ajit.
Thank you.
Yeah, thank you, sir, for the opportunity. We chartered accountants need audit evidence to see if a company has the correct information considering their financial transactions, so that we can vouch their financial statements. SA 500, 501, and 505 covers in detail the process chart of documenting these audit evidences. Now, also SA 570 covers in detail how we can assess and report on the appropriateness of management's use of the going concern basis of accounting in the preparation and presentation of the financial statements. The consequences of this COVID-19 pandemic on financial statement reporting and audit engagements are complex and have resulted in changes for management, those charged with governance and auditors. There is an unprecedented level of uncertainty among the economy, future earnings, and many other inputs that represent the fundamental elements of financial reporting. Both the preparators and auditors are likely to be affected by restrictions on travel and requirements to stay at home. These audit firms may have also pivoted to remote working, utilizing various technology tools available. We draw your attention to the recent webinar that Thrissur branch has conducted on remote audit also. While assessing the going concern basis concerning COVID-19 pandemic, we need to check lots of areas, including the impact on business model, supply chain, business customers. We also need to look into those cash flows that has been impacted by lower disposable income of consumers during COVID-19. And after assessing the same, whether the entity have promoter funds or availability to raise funds, we need to express our opinion. Thank you, CARS Balaji, for the much detailed presentation. You covered a lot in your presentation. On behalf of Thrissur branch, we are extremely thankful to you for sharing such valuable information. And you spend quite a lot of time addressing our doubts also. Thank you for the same, sir. Thank you, Mr. Chairman, for arranging our excellent speaker, CARS Balaji. Thank you, dear attendees, for the attendance. Thank you all once again. Stay safe and a happy weekend.
Thank you.
It's my pleasure.